Mutual fund sahi hai. This is one simple tagline which can really change your future wealth creation journey. It's a powerful message, mutual fund sahi hai, and it's a message which millions, I would say crores of Indians have truly adopted. So we want to take this entire spirit of mutual fund sahi hai, smart nivesh, sahi nivesh. Now talking about investing is old school, but talking about the right way of investing is something which we would be really focusing on. And we're very grateful to Amphi that they have partnered with the Times Network to take this message forward. And I'm going to take this message forward with Navneet Munot, and he's been very kind and generous with his time and always, joins us when it comes to investor education. Thank you very much. Truly grateful that you could partner with us.
Thank you, Nikunj. We are proud of this partnership. And you rightly said that we want to take this message forward of mutual fund sahi hai. Over the last couple of years, it has done wonderfully well. I think industry has built a track record. Industry has exhibited tremendous amount of transparency, which we have increased with active support of the regulator. Technology has helped us in spreading ourselves to Bharat and to every corner of the country. And I think this training part, the mutual fund sahi hai, and why it is sahi hai for every household, I think that has played a big part in the growth of the industry. And the most heartening feature, everybody quotes about 67 lakh crores of AUM and many things, but the most heartening for us is that the unique investors crossed 5 crores last month in September. And to put that number in perspective, few years back, that number was just 1 crore. So 1 crore has become 5 crore. We are serving 5 crore unique investors as an industry. But we know that we have a long way to go. On one side, we can celebrate all the numbers. But on the other side, industry clearly knows that we have a very, very long way to go.
So for 5 to become 10 and 10 to become 20, what will it take?
No, I think many things. As I said, that we continue to build this trust, and I think all the ecosystem partners, and you have played a big role. I remember a couple of years back, we coined this term together, Jan Nivesh. That Jan Dhan Yojana was like a big movement for the country. 1 billion people got embedded into the mainstream financial system. Everybody got the bank account on which transactions became easy over a period of time. But the next logical step has to be people invest right. India is a country of savers. How do we make this a country of investors? And that is what we need to continue on that path and take this message to larger and larger number of investors. I think that's what industry continue to need to do. Technology has been playing a very big role. I mean, we ran a campaign, KYC आसान है. A lot of people think कि कैसे करेंगे, सुन तो रहे हैं mutual fund सही है, लेकिन थोड़ा tough है. So the easier steps, right from your KYC to right selection of the fund to how to invest, various things, we are as an industry and all the ecosystem partners, we are working very hard.
With mutual funds, everybody thinks it's equities, right? That's the first impression which you get. It means stock markets or SIPs. Is it true?
So some of us in the industry, we started career as a bond fund manager, and we have seen the heydays of the fixed income funds also. In fact, 25 years back, I remember all of us used to hear from many people that you guys are only getting money in fixed income funds. Where is the retail money? Where is equity participation in India? And it's heartening for us that now we are seeing the equity participation, particularly from the individual investors. And one particular data point I should not forget mentioning, that now industry has a larger proportion, almost 60% or so, coming in from individual investors, and in the equity funds, 90% money comes from the individual investors. And individual investors, whatever money they have, almost 85% of that is in equity funds. So it's a real, I would say, retail revolution in India that has happened. But last year, interestingly, we also did this campaign, Fixed Income Sahi Hai. We are trying to create awareness, and I would still urge the government that fixed income fund should be looked at with some more sympathy. I think we lost the indexation benefit in the last budget, and I would sincerely urge to look at that. It's about developing the corporate bond market in India. It's about helping people for creating their retirement savings through various asset classes, including equities and long-term bonds, gold, and so on and so forth. So I remain quite hopeful that even fixed income funds have long way to go.
So SIP was more like an alien word now. Now SIP needs no introduction as a concept. But when it comes to SIP, do you think SIPs have started, but the SIPs are not keeping in pace with what your future requirement would be? What looks like a 2,500 rupee SIP, which is the average, AMFI number, you may continue with the SIP, but in 5 years that SIP would lose its pricing power. Is that true in the trends what you see?
You're right. The average ticket size today, so let's say 24,500 crores per month, and around 10 crore SIP accounts is like 2,400 rupees or so average ticket size, because we've also added large number of investors, so we started with a smaller amount. But you're absolutely right. If somebody started SIP 5 years back of, let's say, 5,000 rupees per month. Now, India is a country where I would say 3L you need to keep in mind. One is a larger income. We are not Japan or Europe where your incomes are not growing. We are India. Nominal GDP itself is growing 10-11% or so. Everybody's income is increasing. You have ability to save more. Number two is lifestyle inflation. We all talk about inflation, and RBI and government have done a wonderful job in terms of keeping inflation around 4% or so. But your lifestyle is changing, right? I mean, the gadgets that we buy, the travel that we do, many things that we do is very different now. Your education, healthcare, everything. So for lifestyle, you need to save more. And third is a longevity. Our average life expectancy has been on a rise. So people, whatever they have done, and they think that they have done enough, but they need to reassess and keep topping up that SIP. It's very important. And I would urge you, Nikunj, that take that as also a part of our campaign in the Smart Nivesh, Sahi Nivesh, that are you investing enough?
What is the definition of enough?
So first you set a goal, right? I mean, what are you investing in? A lot of people start, and good that the awareness is there about mutual fund. सही है कि मैंने फंड में लगा दिया, या ये सेक्टर फंड था मुझे अच्छा लगता है, या ये मैंने एक फ्लेक्सी कैप में लगा दिया. But the starting point has to be for what goal you are investing. Is it a children education? Is it your house that you want to buy a couple of years down the line? Is it a car that you are aspiring in few years? Is it for the retirement? If it is retirement, then you're talking about 20, 30, 40 years of creating that corpus and then withdrawing that money in your retirement. First you do that, you then assess your, you look at your return expectations, the corpus that you need to build, the savings that you have today, and the risk appetite also. Each individual is very different. Your ability to or your capacity to handle the volatility. If all your money is in equity, and there could be years, I mean, we have seen in history, last 8-9 years have been very good for India. We didn't see any calendar year or financial year where we had a large correction, but there could be a year where, let's say, market is down 20%. Can you take that volatility? In the long run, you will do very well. That's the history, and that will be the future as well. But in between, can you take that NAV volatility? Accordingly, you put money in equity, some money in fixed income, small money in gold, so on and so forth. You do the asset allocation, and then you do the fund selection.
Okay. What is one common mistake which currently investors are doing? Even though they've chosen mutual fund as the vehicle of choice, you would say that, look, this is something which is like a common denominator factor when it comes to a mistake.
In general, not only about mutual fund, but 2 or 3 things I always tell people that investing mistakes. One is a peer pressure. There's always a pressure because there is an uncle, there is a neighbor, or there is a friend or a colleague who's made more money. And then you get swayed by that and you make some mistake. One is the media noise. And when I say media noise, is not people like you. You are the one who are creating awareness, who are all the time educating people. But these days, the social media and chat groups and all of that, you get swayed by that. And third is some of the behavioral biases, and particularly one of them is a recency bias. You see a certain category of fund, or you see the same thing in the stocks also, something that has done well in last 6 months or 1 year, and you think all my money should be there only. I think you need to do a proper goal planning, asset allocation, and then you do the fund selection. That's more important than just looking at the product that has given the highest return and put all your money there.
There's so much of information available on Google that everybody has become an expert. How does one go about choosing what is right, what is wrong? Because that same data can be interpreted differently.
I think there's a lot of awareness. One good thing about investors is that people have an urge to know more or to understand more, which is a very, very good thing. Also, another thing, just digressing from your question, that people say, are investors maturing now? And one of the signs of maturity is that we see that during the periods of volatility, we don't see suddenly SIP cancellation, so people deferring their SIP. On those days, in fact, when market sees a correction, we see higher number of purchase transactions. So investors are becoming more mature and not getting too swayed by the volatility. But the right way, coming back to your question, is better way would be, in case you are not able to do that, better way would be have an advisor, have a distributor who can guide you and who can look at you holistically and can put a proper financial plan for you.
We've seen a rise in SIP culture, but we've also seen a surge in F&O activity. And it's a madness what's happening there, and it is exciting what is happening in SIP. So I'll use the word madness for F&O, I'll use the word exciting for SIP. How come these two trends are parallel? Because they both are, in a sense, completely opposite, right?
So I think on a lighter note, I don't know when is the last time we were discussing this particular thing, that some people think that investing is another form of entertainment. So there are a couple of apps. It could be an app of a gaming app, and maybe an app where you are doing the F&O, and then you have an investing app, so on and so forth. And they don't see much difference between that. The one good part, when people tell me that, crores of people, participating in F&O, they're much bigger number, which is what I hear. I don't have a way to confirm that. Playing in crypto, people in gaming apps. Apparently, there are 25 crore people in gaming apps. And then, of course, we have 5 crore investors. What I see in all of this is a big change in the society. People want to be rich. People want to make money. People want to have better lifestyle. They have aspirations and ambitions. Now, the thing is, the nirvana is only one way, which is what we say in mutual fund sahi hai. Make the right investment, have patience, give it a long time, don't try to time it. Wealth will get created over a period of time. But people are trying various things. My view is that over a period of time, more and more people will realize the right way of investing is remain disciplined, keep doing your SIPs, keep topping up over a period of time, and have patience.
If you like this video, then like, share and subscribe to ET Now.